Okay, welcome to the Paycheck Protection Program. 7 things you need to know about PPP loan forgiveness. I am Ashley Wicks. I'm a member of Butler Snow's Business Service and Public Finance Group. My practice includes public finance, general corporate transactions, and tax issues involving public finance, tax and local taxation, controversy matters, opportunity zones, and tax credits. Also, we have as a panelist Beverly Winstead. She was the facilitator and coordinator of this panel. She's a principal of the law offices of Beverly Winstead LLC. She primarily represents individual and businesses when they have disputes with the IRS and state taxing agencies. She's also, in addition to managing her own practice, she's also the clinical director of the Low Income Taxpayer Clinic at the University of Maryland Carey School of Law. She's also the first person of color to chair the Maryland State Bar and is the National Bar Association's 40 Under 40. Next, we have Joy Smith Sistrunk. She's the founder and principal of Premier Group Services, Inc., a certified public accounting and management consulting firm founded in 2005. Her firm is located in Atlanta, Maryland, and she provides personalized accounting and financial management services to government contractors and professional service firms. She is passionate about serving others. She is also a former Air Force Reserve. She is also a former U.S. Air Force Reserve in the Air Force U.S. Reserves. Okay, she has an accounting degree from the Loyola College of Maryland and a master's in international business from the University of Baltimore. Next, we have Dr. Zach Poja. He is admitted to practice in the United States and Cameroon. He's a national bar 40 under 40. His practice is based in New York. He's a part of the tax group at, is it JIDE LLP? He specializes in the U.S. tax aspects of cross-border transactions and has extensive experience in core U.S. international tax regime, including U.S. tax treaties, tax aspects involving M&A, and tax planning. Okay, so Kyle, has she joined again?
No, not yet.
Okay, so I'll move on to a couple of housekeeping matters. Please grab a pen and a piece of paper and get ready to take notes. The information we're sharing with you, we hope is very useful and can be beneficial not only to you, but to some of your clients. The information we're providing is current as of May 26, 2020. As we'll be discussing this presentation, this area is constantly moving, constantly changing. We're waiting on additional guidance from Treasury regarding some items. If you have questions, there's a Q&A box at the bottom of your screen, and I will monitor your questions and try to do them justice as we go along. Kyle, do you want us to go ahead and get started? I know that she said that she had a call come in. And
Yes,
when she joins?
we can proceed, and then I'll let you know once she joins.
Okay, thank you.
Mm-hmm.
So just to give you an overview of the 7 things that we're going to discuss today, we're going to talk about what forgiveness means. What can the PPP funds be used for? The importance of having good accounting records, why tracking the money is necessary, how to ask for forgiveness, how does the economic injury disaster loan impact the PPP, and post-forgiveness aspects to consider. We'll begin with a brief recap of PPP by Zach.
Thank you, Ashley, and thank you everybody for joining us. I know 99% of the borrowers That's because we don't like to say 100% of borrowers who get applied for the PPP do so with the full expectation of getting the loan forgiven, having anything they borrow, any cash they get or whatever support they secure, they fully expect the support to be, the loan to be fully forgiven. So it is our goal today to make sure that, in fact, that is exactly what happens, that we give you some insight into how to make sure that your loan is forgiven and your support is, in fact, a grant. But before we get there, and before we get to that specific objective, let's just take a little bit of background and level set and go through what the PPP is. And by PPP here, we understand the Paycheck Protection Program. So in the next few minutes, I'm just going to take a little bit of time to walk you through and try to highlight first the circumstances that led to the PPP, and then we'll try to answer the question, why the PPP? And after that, we'll look at the framework that came along with the PPP, and we'll close that brief background with how the PPP exists or coexists with other existing support programs, because the law not only did come with the PPP, but it came with other support programs. And already there were a number of programs in the system. How does the PPP fit into the big and that wide network of support programs that we have currently? All right, so talking about the circumstances. So if you were living in a different planet for a little while, here is a little bit of breaking news for you. The world has been going through a very, very difficult pandemic. Starting in 2000, the US started getting hit with cases, illness, deaths. Some businesses started struggling, people losing their jobs, losing their finances, some businesses closing. And on March 13, 2020, the president decided to declare a state of emergency, a national state of emergency. And with that, Americans and people in the US were encouraged to stay home, not go to work. And that only made the economic problem that was presenting itself accelerate. More people started losing their jobs, businesses closed. So with some kind of an unprecedented speed, in just 2 weeks after the state of emergency was declared on March 13, on March 27, Congress passed the CARES Act. And CARES here is the Coronavirus Aid, Relief and Economic Security Act. That was passed on March 27. And again, I use the two words Congress and speed in the same sentence. So it was totally unprecedented. It was very quickly done. And with that, as we'll understand soon, they have been struggling, and we have been struggling as advisors to understand what was done, and they have been struggling to try to fix what was very quickly done. But on the 27th, the CARES Act was passed, and the government here injected about over $2 trillion into the U.S. economy, which stands now to be the largest support emergency program in U.S. history. And the money at that point just started flying around. And the question you will ask is, why? Why would you decide to have money start flying around just like that? And the rationale, that's the second point you will understand. The rationale behind that is the government was trying to keep businesses afloat. The government was trying to keep employees on the payroll. And to picture this a little bit, it's as though the government decided at that point to take the entire US economy and put it on the government's payroll. The government said we will try to do all we can, even though people are staying home and not working, to give the employers the money they need to keep their paychecks going and to keep their payroll going. And with that, you understand immediately that the bet of the government at that time is that we're dealing with something very temporary, because an economy like the US economy is not necessarily something the government can promise to put on its payroll for a long time. So the understanding was we're dealing with something unique, something temporary, and we have to do all we can do to make sure with the very temporary situation. And again, we are coming to understand that the situation may not be that temporary. And Congress has come back again and again to try to replenish, at least as far as the PPP is concerned. So the government took that unprecedented step, more or less taking the entire US economy on the government's payroll on the bet that we had a temporary, extraordinary situation that we had to deal with. And again, money started flying around, lots of money, billions and billions of dollars, hundreds of billions of dollars, in fact. And by the second time, we were over $600 billion put into the PPP fund to try to help employers provide paychecks to their employees. But very quickly, again, there were some holes that were shown into the program. So I'm going now into the framework. How was the PPP structure? It was really originally intended for small businesses. I always remember, and again, I deal with a lot of large companies and a lot of foreign companies. And one of the very initial questions we had when the PPP came around was, if I have a big foreign company that has a small subsidiary in the US, will they qualify for the PPP? And knowing the Small Business Administration, traditionally, their support and their measures do not apply to US subsidiaries of foreign companies, because the rationale being that the subsidiaries of a foreign company should go get help from whatever foreign government is the host of their parent. But here again, things became different, where even foreign companies with US subsidiaries, in fact, the IRS came back later to clarify that the US subsidiary was eligible for the PPP on if certain circumstances are met. So I bring that up to say, even though the program was intended for small businesses, we all saw very quickly how more or less large businesses got into the game. Again, when money starts flying around, why will you not catch it? And when the Small Business Administration defines a small business as 500 employees, and they come up with very unique and interesting definition of affiliation, it was something that wasn't very strong and clear. So a lot of large businesses did get into the game, and they secured a lot of the loans. So that the initial funding of the PPP program ran out very quickly. So they came back and they added 310 billion and tried to fix some of the things that were lacking in the first iteration of it, to the point where now we still have money, and the program has actually slowed down. And then a strong program aimed at having small businesses survive. How does it work with the existing programs? How does it work with the programs that were even provided for in the exact same law, the CARES Act? And this is something that we always warn our clients. The PPP sounds great, but just don't jump into it right away. Try to make sure that you understand the other programs, because unfortunately, a lot of them, or reasonably a lot of them, are exclusive. You cannot qualify for PPP and qualify for something else. So usually take the time, and I know for some of the borrowers, it's too late in the game now to have this reflection, but always take the time to look at the other programs that exist and make sure that the PPP is actually the one that is the most beneficial for you. Because there are other programs, and I can think specifically about the EIDL, and we'll come back to these terms and to these notions later. But if you were, for example, to secure some EIDL funding, that will impact the amount that could be forgiven under the PPP. So we always look at the PPP in the context and the holistic system of everything else that exists as a support program, and make sure that you analyze and adapt it to your specific situation to make sure that it's actually the best program for your business and for you. Again, the program is today to make sure that we understand the tips and the different requirements for forgiveness. But level setting, we had a specific circumstance. We had an unprecedented action by the government aimed at making sure that Americans stayed employed. At least they thought temporarily they had to act, but then make sure that it fits within the wider framework of the other support programs that exist. I think we can go to the next slide.
Thank you. I was talking on mute. I got to remember to unmute. Thank you, Zach, for that overview. Kyle, the presentation that we did 2 weeks ago, it's available on the NBA's website. Is that correct?
It will be.
It will be available. So if you have any questions about the application process of the PPP program, the requirements, and we're going to talk a little bit about what's eligible and what's not eligible. The presentation, the previously recorded presentation, kind of goes through those steps. But Zach gave you a great overview of the background at how we got to where we are now. So we're going to move on to Beverly, who's going to talk about what forgiveness means. Beverly?
Thank you, Ashley. So I just want to make sure I'm not on mute because I have a habit of being on mute when I'm talking. So what does forgiveness means? Forgiveness is essentially what we all are looking for, I would think. Why apply for the PPP loan if ultimately, your goal is not to get the funds forgiven or get the loans forgiven? So when we talk about forgiveness, as we said about 2 weeks ago when we did this presentation, really the loan kind of turns into a grant, right? So that's what we all should be aiming for if you in fact apply for this loan, in our opinion. So what does forgiveness means? Okay, it means you don't have to repay the costs that the loan that is paid or incurred. Yeah, all right. What we want you to know about forgiveness is, it seems like originally when the statute was written, it said paid and incurred, which means you had to incur the cost and also pay out the funds during the 8-week period. So if you have a piece of pen and a piece of paper, you want to make sure you write 8 weeks on that piece of paper, because that is the covered period. It is critical that if you get these funds, you have 8 weeks to spend down the funds for it even to have the chance for it to be forgiven, right? So 8 weeks. 8 weeks from what? 8 weeks from the date that the loan is dispersed, meaning that it actually hits your bank account. And then there's also an alternative covered period, which says is the first day of the first pay day in the first pay period from when you get the funds. And I know Joy is going to talk more about that. So just know, write down it's 2 dates when it comes to when you have to spend down these funds: date of disbursement, and then there's an alternative covered period. So originally, like I said, the statute when it was written, it said paid and incurred. Last week when the SBA put out a final interim rule, it looks like they're taking a more expansive view, and the expansive view basically says paid or incurred. So I can imagine a situation where you incur payroll cost, let's say for the week prior to you actually being dispersed the funds. So you have the funds now, but you incurred your payroll cost the week before. So if it's paid or incurred, you should be able to use those funds, or those funds should be eligible also for forgiveness. So the other thing is, when we talk about the goalpost keeps moving, and I know the SBA is going to continue to put out guidance. So a couple of areas are, the May 22nd guidance places restrictions on the amount paid to owner employees of businesses that will be forgivable. So owners, employees, if you have an S Corp, you fall in that category, we believe. And the reason why we say we believe is because even in the guidance, they didn't clearly define what owner employees are. And so the question is, are they using the definition, or are they defining owner employees consistent with how Treasury defines the owner employees? And that's important because if you do have an S Corp and you have family members that also work in the S Corp, there's attrition rules that basically say that if, particularly like, let's say if you're husband and wife, or your child, and you're a shareholder and your parent is a shareholder, the question is whether or not the attrition rules will cause you to fall into this category where you can only take the lesser of $15,385 or 8 over 52. And the reason why it's 8 obviously is because there's an 8-week covered period and there's 52 weeks in the year. So those are just general frameworks. I know Joy, she's a CPA. She normally gets into more technical details of it, so I'm going to leave that to her. But I just want you to understand the overview of how the goalpost keeps moving, and we believe SBA is going to continue to redefine or clarify some of the guidance that they put out on May 22nd. And the other question is that we have is when it comes down to businesses that started from in January 2020. Now look, the PPP loans, recall, were eligible. You could apply as long as your business, you were operating or open by February 2020. But the way the rules are written now is that forgiveness is applicable. You do a look back to the 2019 compensation. Well, the 2019 if you just started in January, you don't have 2019 compensation. So definitely the SBA is going to have to put out additional guidelines for that. And I bring it to your attention because I don't want you to panic if you did start your business in January 2020 or, prior to February 15th of this year. Just be aware that, SBA is going to put out additional guidelines. The other thing is, we're advocating as members of the National Bar Tax Section, as members of the American Bar Association, as members of the AICPA, that, look, this is going to be too much work, and it doesn't make sense for the SBA to go through really looking at all these people that got small loans, right? If you got a $10,000, $15,000, or even $25,000 loan, the application itself is 11 pages for forgiveness. So we believe that the SBA really should, allow people that get loans under a certain amount to either have a short form application, or they should have the opportunity, or we should to just it be an automatically forgiven loan, because the paperwork and administrative burden to the agency, as well as to laymen, and even as a tax practitioner, is just going to be too high. So that's what we're doing behind the scenes right now. You can go to the next slide. Okay, so number 2, PPP loans must be used for certain specified purposes to qualify for forgiveness. So just keep this, just like you have on your sheet of paper now, write 75% in one column and write 25% in another column. The way the law reads now is that you can use up to 25% for rent and utilities. You can pay those, right, with these PPP funds. The remaining 75% definitely has to be used for payroll, health, retirement. You can even pay your employees bonuses, or you could do an allocation where it's 100% payroll, or anything between 75 and 100% for payroll will make you eligible for loan forgiveness. But you can only pay up to 25% in rent, utilities, and mortgage interest if you actually are owning the building, right? Just interest, not debt, not principal. Well, not principal. So I'll give you an example. Let's say you get a loan for $107,500. Just know that $80,625 has to go toward payroll, health, retirement, bonuses, that kind of thing. And then $26,875 has to be, can only go toward rent and utilities. The third thing we want to say about this loan forgiveness is, look, your accounting records should be in order. You want to make sure you maintain good accounting records. The documentation, once you apply for loan forgiveness, you have to keep the records on file actually for 6 years. But even as you apply for the PPP loan, it is going to be critical that the information that you submit, because one of the things they ask you, even as an LLC, a sole proprietor, they ask you, and a partnership, they ask you what your earnings are for 2019. Right, you have to submit a copy of your tax return with the application. If you are a single member LLC, you have to submit at least a draft Schedule C. So if your accounting, it behooves you to make sure your accounting records are, you know, consistent with what you are submitting to, you know, the agency. And I say that because sometimes, you know, we work with clients and they want the money, but their books are so jacked up, you know, not in good order, that we have to go through, and I will not submit an application if the books are not in order. So I know a lot of times as attorneys, as working professionals, as parents, we are really busy. We don't, you know, that may be one of the last tasks that we do, or we leave it for the end of the year. um, Before you apply, and you know, I have to admit myself, you know, before I applied, I needed to get my books in order, and thankfully, you know, I reached out to Joy, and Joy was actually able to help me get my stuff together. Because one of the things, and I know there's a couple of fraud cases that DOJ is already prosecuting people for fraud, and it wasn't really so much about the loans that they apply for, but they basically lied on their applications. And I know that that's something that you want to make sure you have the documentation, even if it's off a little bit. You know, I think there's some leniency, but it definitely cannot be just fabricated numbers.
Bev, or we have a question in the Q&A. Is the 75-25 rule for both PPP and EIDL?
So the EIDL can be used for any cost. The EIDL, the thing about the difference is you have to, the interest rate is like 3.75%. Paycheck Protection Act, as Zach said, really is intended to keep America working. So those funds, that loan is a 1% interest rate, but it also can be forgiven. But the intent is strictly really about keeping payroll, keeping people employed.
Okay. Well, thank you for having
Joy,
me. Yes, ma'am.
So before you begin, and you'll probably cover this some more in detail, could you talk a little bit about, we had a question in the Q&A about utilities and whether or not Wi-Fi and internet qualify as eligible utilities?
So right now we are treating it, they have said telephone cost is an eligible cost. We are treating Wi-Fi like that is also an eligible cost, as is. And so if you have it bundled, you must subtract out what you have for like Netflix and HBO, your cable cost. That is not, at the moment, with the information we have now, is not an eligible cost. But you can do Wi-Fi and telephone.
Okay.
And so with that, it's important, because we know that there are going to be random audits around this. And actually, before I even start on that, if you have not applied for the PPP loan yet and you believe that you're eligible, there are still funds available. So I want to make sure we mention that. You do need to get in contact with your bank or Beverly or I or any of the panelists, as we know of different banks that have funding available. But there is still funding available there, so there's still time if you have not applied yet. But if you have applied, we've already been notified by the IRS that by the SBA, that if you have gotten a loan of $2 million or more, you're definitely going to be audited. Everyone else who's gotten less than that is going to have they are going to be randomly selected for smaller audits. So what we're recommending is that you separate the funds in a separate account or a minimally used account. What's a minimally used account? It's an account that you don't have a lot of activity in, because we can imagine at some point, whether you're audited or whether your particular bank requested, they may at some point ask for your bank statements, and you don't want to give them your operating statements and even look like you may have spent the money on something else besides payroll. As far as employees, this is going to become one of the kind of flagship issues, if you will, for forgiveness, because you have to be able to determine how many employees you had at February 15th. If you're a sole member, for the purposes of the PPP loan, you would be considered an employee. If you have other employees, or you had to lay someone off, or people have quit, there are safe harbor provisions that they put in place for you to be able to figure out how many employees do you have. And what they're going to do is they're going to want you to calculate that by dividing however many hours the person worked by 40 to determine how many FTEs you had as of June 30th. And for example, if you have part-time people, you can count them together. All of your part-time people would have to work more than 40 hours to be considered one person. So if you have two people working 40 hours a week, they'd be considered one person. And so the employees is going to be an important calculation for forgiveness. Next up, because this is a loan, we're suggesting that in your financial statements, when you do your accounting, that you create this PPP loan and put the liability on the books, because until you submit your application and it's actually forgiven, this is still a loan. And what we know right now from the IRS is that the expenses that you pay with the PPP funds will not at this moment be eligible to be reported on your tax return. So therefore they need to be separated out into four separate expense categories: salary, rent, utility, and health spending, so that you can have an idea of what you spent the money on. It helps you to track it for forgiveness and for separation if this winds up still remaining a non-deductible expense.
Joy, can you turn your volume up a little bit? And we have a couple of questions for you.
Sure.
Okay. Just to clarify, EIDL funds can be used on anything, and thus the forgiveness process for EIDL won't have requirements. And so that's Beverly or Joy.
So there is no forgiveness for EIDL. There was an EIDL Advance, which we're going to talk about in a few minutes, but I can give you a preview. The EIDL Advance was a grant. It is treated as a grant, but it will impact your PPP, which will show you the calculation for that. But EIDL as a whole is not a forgivable loan. You have 30 years to pay it back, but it cannot be forgiven, and you have to use it for general business operating expenses. So you can use it on anything business related.
And it's a rate of, is it 3.75?
3.75%. If you're a business, if you're a nonprofit, it's 2.75%.
Okay, we have another question. If you are approved and received a PPP loan number, but you haven't received the funds in 10 days or more, where can you check on the status of your disbursement?
You should be calling your bank, because they are that's the rule. By rule, they're supposed to disperse within 10 days. Now, they didn't designate whether it was 10 business days or calendar days. So that's the only, I guess, a little bit of play in that. But I would definitely be calling the bank where I got the funds at to request a status update, because I would be emailing and calling them to find out what is going on. And also, some banks created a separate account for it. So I would, again, be contacting the bank just to see what happened.
It says we have 1099 people, and they are not necessarily the same people each time. Different cases, we have different people. So how would that work?
So 1099s, you cannot pay 1099s with PPP funds if you want that money to be forgivable. And they do not count as FTEs. So I'm not sure. You can use the money if you got PPP money and you pay a 1099. That is not a forgivable expense.
Okay. If you are a sole employee, and can you give yourself a small bonus in addition to regular salary?
Yes, as long as for the 8-week period, you do not exceed $15,385, I believe it is. So you can't pay yourself more than that.
Yeah, but let me also quantify that, because the guidance that came out on May 22nd also put in that extra nuance where you still have to look back at 2019 compensation.
Make sure, yes.
So yeah, you definitely have to look back at 2019 compensation, and depending on if it's consistent with 2019 compensation, yeah, you can pay yourself a bonus.
But in the case of a sole proprietor, yes, what you're reporting as your profit on your Schedule C needs to be consistent to Beverly's point.
Okay. And what are considered utilities? Is your phone, we talked about this a little bit earlier. Is your phone, internet utilities? What about alarm company?
No. So what they've given us right now is a pretty strict guidance. in that it has to be electric, gas, water, telephone, or transportation. I know our profession, I know the Bar Association as well as the CPA, a National CPA Association, has asked for more guidance and some leeway, because that is a pretty strict, it's a pretty strict interpretation of the rule, and it doesn't necessarily hit the mark, because now with us being more virtual, there's a lot of expenses that we would consider utilities that they're not considering utilities. So we've asked for additional guidance. So for right now, we are telling our clients to just stick to the basic interpretation. If at some point they allow these things, then we'll submit them for forgiveness as well.
Next question. Under the create four expense accounts, I noticed that there is no COVID-19 tax deposits for employees' personal income tax deposits. Are employees' personal tax deposits included as an allowable forgivable expense?
So the way that should be actually a part of the salary, because taxes is actually a part of gross salary of what you're paying. It shouldn't be separated out, because whatever taxes they're paying is a part of their gross salary, and it's not a separate line that is even allowed for forgiveness. So taxes cannot be paid for the employer portion, but employee taxes are already included in their gross salary. So when you're looking at your third-party companies' reports, you should look at gross salary, not necessarily what's being deposited into their bank account.
Okay. If you just received a PPP June 1, when does the 8-week period start in the end date?
It would be June 1, and it would end somewhere probably around July it would end on July, probably the 29th or 30th.
Okay.
Next slide. So the path to forgiveness is, they've given us, the SBA has issued an application. We definitely know that you are going to have to submit payroll documentation. We're going to have to submit FTE documentation. They're even asking for names and the number of hours, and anything that you spend money on, your non-payroll costs, your rent, your utilities. They're going to want to see the invoice and most likely the check. So I was actually talking to a client yesterday, and she said, I haven't used checks in years, but this is the time to use checks, because this path to forgiveness is going to be a bit tough. And so you can make it easier on yourself by gathering all your documentation each time you make a payment using the PPP funds. That will make it a lot easier. And so your 8 weeks, like the individual I was just talking about, would have started either June 1, or now they've given us guidance for these alternative 8-week periods, or you can line it up with the first day of your next pay period. So if June 1 didn't start your pay period, but it starts on I think next Monday, then you would use June 8th as the beginning of your 8-week period. But you have to line it up based on either the day you receive the funds or the first day of your next payroll after you receive the funds. Though that would be the alternative pay period date. But we definitely know we're going to have to submit payroll documentation. We're probably going to have to submit payroll schedules. They're going to want a lot of information. So it would behoove you to start gathering it now and putting it all to the side now, so that when the application process becomes clearer, you're prepared. You can either scan everything in or just upload or mail it, however your particular bank is asking you to put that documentation in, because we have the SBA application, but remember, the bank can add other stipulations or request additional documentation to make sure that you can prove forgiveness.
Joy, when you talk about documenting expenses, so are you saying I need to have the bill itself, a copy of the check, and what else?
And probably I would say a copy of the bank statement, or if you can go on the bank account and show the back side of the check to show that it actually cleared the bank account. So that's further proof that it was actually paid.
And there was a question by Angel of will these slides be provided? And the answer is yes. And Kyle will give more about the logistics at the end of the presentation. Is that right, Kyle?
Yes.
Okay, very good. What when can the application for forgiveness be submitted? How soon?
So originally we were told we would start seeing them on July 1, but actually it's going to depend on each bank. So much like the rollout of the PPP program itself was a bit rocky, forgiveness probably will be just about the same, because each bank can tell you is going to have its own process. So there is not going to be one size fit all. They each have to either modify their website or figure out how they're going to get these documents. So I would start looking for forgiveness around July 1. And then the other thing is we have some bills going through Congress right now where they're trying to extend the period, the 8-week period to, I've heard 16 weeks, I've heard 24 weeks. Right now it's still at 8 weeks. So if they do that, forgiveness also may change again. So because that would mean the SBA would have to change this application again. There's going to have to be additional guidance. So I'm going to say sometime after July, we should start you'll hear more talk of forgiveness, and then you'll kind of be able to determine.
And maybe just to add to that quickly, Jai, I think that's a very high likelihood at this point. I think Congress already passed the 20 whatever week they're asking for. But it's very likely that in the coming days, actually, there could be a compromise with the Senate, which will extend this at least to 16 weeks from what we are hearing. So that's a very good point.
So Joy, if there's an extension from 8 weeks to 10 weeks or 12 weeks, that's just an extension to expend the money. That doesn't mean you get to go and ask for more money, right?
Right, exactly. Now that not unless the legislatives change, because right now, as it's written, once you got one PPP loan, technically you are, based on the loan documents and everything I've read, you aren't eligible for another PPP loan at all this year. So unless they change the rules, you can't just go back and ask for more money.
Oh,
Go ahead.
No, well, go ahead, Ashley, and then I'll ask the question.
Well, I was going to ask the question about the availability of funds. Are funds still available?
Yes.
Under the last tranche, is that correct?
There are still funds. So if you haven't gotten a PPP loan at all, there are still funds available. There's still banks taking applications. There are still banks with applications in the queue. So there definitely still time for you to apply.
Yeah,
definitely.
Yeah, and yeah, there's still time to apply. We're encouraging people to go to smaller banks, locally owned banks, because we've been working with clients and we see that they get their money a lot quicker than going to these big banks, Wells Fargo, Bank of America, things like that, have had trouble processing them. So here's my question, Joy. It goes back to the 8-week period, 16-week, because I do believe they will extend it out to 16 weeks. What happens if, let's say for 2 weeks, you didn't meet the FTE requirement? Now that you have 16 weeks, are you able to, but you only have 8 weeks worth of funds, 2.5 if you do the multiplier. Can you now, when you apply for forgiveness, can you now say, okay, well, in week 10, week 10 through 16, I met the FTE requirement?
So I think what they're going to wind up doing is moving that. If they extend the date, they will also extend that June 30th and give you, like you're saying, a range of dates to say, maybe I didn't have the FTEs on June 30th, but maybe I had them on July 31st. This is now we've moved the goalpost. This is now what I'm going to use as my FTE date to qualify for forgiveness, because I was able to, stores open back up. I was able to get my operations back on track. And now I can actually have the funding to keep these people employed for longer than the 8-week period of time that you even gave me. And I've set myself up to be a little bit more sustainable.
Yeah, I could see that happening for particularly people, let's say in the restaurant industries.
Exactly.
Yeah, okay.
Thank you.
Joy, we have another question. What category do we put mortgage interest or any other interest paid from PPP?
I would create a COVID-19 interest line, because remember, you're not going to be able to deduct this interest on your tax return. So I would just add a 5th category to call it COVID-19 interest.
Okay, and then will the bank notify PPP recipients when they can submit their forgiveness application?
So I think what you're going to see is you're going to see a lot of, they should be sending emails and you're going to see a lot of broad guidance, but they may not send you an individual email and say, hey, your forgiveness is almost up, submit your application. Now, I don't think they're going to do that. What I think you're going to see is just generic emails to say, here's our forgiveness process. And it's up to you to kind of jump on it. If you know that your 8 weeks is up or you've used all the money, as soon as the application process opens, you should start applying because they have up to 60 days once they have a completed application to process it. So you know what that means. Anything that's deemed to be incomplete or missing documents can cause you to go back and forth with your lender for the loan. And the other thing to keep in mind is 6 months after the payments start, after you receive the PPP funds, most of you have already given your lender consent to just start drafting those payments if your loan hasn't been forgiven yet. And so you want to apply for forgiveness as soon as possible and have as much complete information as possible. So in this case, if you have spent the money, as we've talked about, on payroll, health and retirement, state taxes, or rent and mortgage interest, that amount can be forgivable. And it should be forgivable as long as you have the right amount of supporting documentation. Next slide, please. If you receive the EIDL advance, if you got anywhere from $1,000 to $10,000 of the EIDL advance, they have now tied the advance to the PPP and said, well, you got an advance of the EIDL. That we're going to treat that as a grant, but you can't be forgiven for that same amount for the PPP loan. So if you got a $10,000 EIDL advance, $10,000 of whatever PPP money you got will not be forgiven, and that will just become a 1% loan. So in fact, most people who, if you got an EIDL advance, there's no way for you to reach 100% PPP forgiveness.
We have an additional question. In filling out the loan papers, they let you specify if you use 1099s, and in the forgiveness section, it says forgiveness amount must be used for payroll costs allowed by the SBA and applicable law. Where is the definition for payroll allowed by SBA?
So it's actually in the original application. When you see them ask about 1099s, they're talking about your own if you are a sole proprietor and you were paid by a 1099 because you're trying to report that amount. They're not talking about 1099s you pay because 1099s by definition are independent contractors. They cannot, under any circumstances, under federal law, be considered to be employees. And so, and more importantly, your own 1099s were eligible to do their own PPP loans. So you can't double dip by trying to include them as employees. So this is the definition. They're using the definition of employees under federal law. If you're not paying taxes for them, you're not paying FICA and Social Security, no unemployment, they're not an employee. So again, we talked about what's needed for forgiveness. You need your payroll records. You're going to need your payroll reports from your payroll company. They're going to want evidence that you maintain the same number of people from either February 15th, you had the same number of people on February 15th or more that you have on June 30th or more, unless you can meet the safe harbor provision, meaning people quit. And so you're not penalized for people that were either quit or fired for cause, and or people who maybe you laid off and tried to bring back. As long as you gave them a written offer and they didn't, and they refused it, you will not be penalized for those people. And so that there's some help in there if you don't have the same exact number of employees. They are going to want to see canceled checks. They may even want to see bank statements, which is why we talked about putting it in the new account or minimal use account. Everything for health insurance and retirement plans. Again, they're going to want to just see the documentation, including for health insurance and retirement plans. They may even want to see the plan itself to show that you didn't just set this health insurance plan up today, or that you gave that all employees are eligible. So the amount of documentation they can request can actually get pretty granular. So we're just not sure yet, but I'm sure they're going to be asking for a lot.
Do you all believe new retirement plans will be considered for forgiveness?
I don't think so. I think you would have had to have it either, you would have had to have it by February 15th. That seems to be the sticking point. So, or if you had like a SEP IRA in a prior year, it needs to be something that was there before you got this money. I don't think you can just go out and do one right now.
And
Yeah,
so,
and I totally agree. I totally agree with that. I think it has to be in place on February 15th. And the spirit of the law is to try to have businesses that were normal functioning before the law came into place, and they try to avoid people using the beneficiary provisions of the law to come up with new structures that would not fit within the framework that was in place before. So I will fully agree with that.
Okay, great.
Joy?
Um,
So I'm
Is
not
Joy
sure.
frozen?
Yeah, Joy, can you hear us now? So I'll just interject while she gets her internet connection back up. So I know Joy has been working with a lot of clients, and she actually created a PPP tracker. And the PPP tracker allows you to make sure you meet the requirements of it counts the 8-week period for you, and then make sure that you are aware if you're eligible. Yeah, she's fading in and out.
Okay.
Okay, we lost her.
So maybe she'll rejoin.
Yep.
We have another question. I'm a sole practitioner and my PPP loan was funded and dispersed for a loan amount calculated based on the owner's draw assumptions, substantiated with 1099s. My bank approved this methodology despite the fact that my net profit was negative and I provided my tax return. I'm now reading the payroll tax forgiveness will be solely for payroll for forgiveness purposes will solely be based on Schedule C and E net profits, and that perhaps I was not eligible for the loan in the first place. Your guidance would be appreciated.
Just a quick question. Did they file the 2019 taxes already?
Derek, did you file your 2019 taxes? Oh, I can't see.
So I would say we're waiting for additional guidance to that point though, because if they deem sole proprietors to be the owner employee and it was negative, then what that would mean for that person who made those
He said
payments.
2018 was used. And it was based on his owner's draw assumptions, not his net profits.
So on his 2019, his net profit needs to, net profit is going to need to equal the amounts he paid himself for the PPP loan, at least that, in order to qualify.
Yeah, he really needs to do move forward and do a draft of his 2019 tax return.
Mm-hmm.
And from there, make a decision or at least get some advice on what the next steps are. But I'm not sure what bank you use and why they would even accept the 2018 tax return, because it was supposed to be the 2019. Everything is a 2019 look back.
Mm-hmm.
And this brings to a good point, because we're talking about forgiveness, but if you're not, if a portion of the PPP loan does not qualify for forgiveness, what's the consequence?
You just have a regular loan at 1%. So whatever portion isn't forgiven is still a loan at 1% that's due within, at that point, 18 months.
Yeah, which is not a bad thing.
Which is not.
Yeah, it's not a bad thing. I mean, 1% loan.
And we'll come back to that
loan that they
later.
didn't check your credit for, and that you got without having to put up any collateral. That's amazing.
Yeah.
And we'll talk about deductibility later. You will probably still get to deduct that if it's not forgiven.
Mm-hmm. So that's a good point. I didn't think about that. That's a very good point.
We have another question. If you had to lay someone off prior to receiving the PPP funds, do you have to rehire that person, or can you hire someone else to claim the same number of employees?
You can hire someone else if you don't want to bring that person back because they, for whatever the reason, as long as you replace the position, and you have that FTE, then that's fine.
Mm-hmm. If you don't take a salary and money generated from your small business is used in business operation, you would not meet the PPP 75% portion. So can you then pay yourself as a sole proprietor in order to meet the requirements of PPP? And
Yes, you would pay yourself. You would write yourself a check and put it in your account. And then if you turn around and use it for operations from there, that is completely up to you. But it just needs to be captured correctly to have that amount forgiven for PPP funds.
Okay. All right, but let me just say this, the amount that you apply for in the loan is still predicated on some figure, and the figure is a look back at your 2019 tax return. So if you didn't take a salary in 2019, and you had, going back to what Derek said, if you had negative income, then technically you wouldn't qualify for a PPP loan. So I think that's the ultimate question. Even when we evaluate whether or not we can help a client, the first thing I ask for, I say, hey, let me look at your 2019 tax return. And from there, I can calculate whether or not, I can look to see whether or not you're eligible. And I can also calculate what the loan amount should be that you would qualify for.
Mm-hmm. We have another question. If you don't, I think I just answered this one. If you don't take a salary, did we talk about this one already?
Yes.
You don't take a salary and money generated for your, we did talk about this one.
Yes.
Okay. And then we have another question. This person was not in the negative, but only filed 2018 so far, because when filed for PPP 2019 had not been completed. The bank made it seem that they could receive forgiveness for paying our people with 1099s. Should we ask the bank?
No, you don't have to. I mean, you can, but so the bank people are telling you what they think. We're going strictly by the SBA rules and regulations. You can pay people, 1099 people with PPP funds, but it will not be forgiven. It will not be forgiven. You can absolutely do it, and you can pay. You can take that loan and pay the 1% on it, but I promise you, it will not be forgiven by the SBA because they have defined what an employee is. And if you're not paying payroll taxes on those people, it's not going to be forgiven.
Okay. Another question. Sole proprietors really have taken pay, but generally are paying bills with it and not delineating their pay by writing themselves a check, but on tax returns, it shows that they received a certain amount of money after deduction. So is that proof enough?
So that goes back to the Schedule C. Mm-hmm. The Schedule C, you need to look to see what your net income is on the Schedule C. Because, yeah, I'm a single member LLC, but I don't take a draw each month. But I look at my Schedule C at the end of the year, and I say, okay, how much of, when I look at my gross income, I look at all my deductible expenses, there's some figure there, which is the net income. And from there, I take that amount divided by 12 months, add back in the depreciation, because depreciation is not economic outlay, and then multiply it by 2.5. That's the amount that we come up with. So you don't have to physically take yourself, draw a check, go to the Schedule C, see what your net income is. And if you haven't done your 2019 tax return, that's why I say you really need to make sure you get that done before you apply for the PPP.
Okay. You may have reviewed this previously, but could you either specify what portion of your payroll can be used as PPP eligible, or what portion cannot be paid with PPP funding? My understanding is that you can't simply look at what was deducted from your bank to pay the payroll.
Right. You need to look at, if you're using a payroll company, you want to look at gross salaries. gross salaries, and you want to make sure first you're going to start there, and then you're going to see if anyone in their gross salary is making more than $3,846.15 per biweekly payroll amount. If so, that part gets excluded because you can only deduct that much every 2 weeks per person. And that is then how much you can use PPP funds for. So that is gross salary. Gross salary is before you take out all the employer portion, the employee portion of the taxes. So that is, if you just take their rate times how many hours they work, that is gross salaries. And so you want to focus on that. That's how much you should be, and do make sure you're excluding anything over $100,000. And then that is how much you can use PPP funds.
Are health insurance premiums and eligible forgivable expenses part of payroll?
They are, but it's only the employer portion. You can't take the whole health insurance bill and try to say we're paying, unless you pay 100% of the employee's health. But most people in this day and age don't. You can only, the only expense that can be included is the employer portion that you're paying.
You know, move on to the next slide, Joy.
Sure. So what expenses are excluded from you? You cannot use PPP funds for salaries over $100,000, payroll outside of the U.S. You cannot use PPP funds to pay the employer portion of the federal, the FICA, the Social Security, the Medicare. You cannot use it for that. You cannot use it for any employer FFCRA credits. You cannot use it for mortgage debt or principal. Remember, it's interest only. They're not trying to pay down your mortgage. They just want to help you by paying some interest on it. And again, you cannot use these funds to pay 1099s. And if you use it for any of these excluded expenses, the portion of the loan that you use for it will not be forgiven. Next slide.
Can you use PPP funds for clergy house allowance?
Actually, they did say that as long as it does not exceed the $15,385, you can use it for a portion of the clergy house allowance. They did make that an exception.
Can you pay off the PPP loan before it's due?
Yes, absolutely. And there's no prepayment penalties.
Okay. Just to clarify, as a sole practitioner, are my personal health insurance premiums considered the employer portion?
No, not at this time. Nothing I've read says that we can include that. I don't know if Zach or Beverly has a different perspective.
Yeah, that's my understanding as well.
Okay.
At this stage.
I pay for minimal life insurance for my employees at 100%. Can I deduct that expense?
No, actually, they've been very narrow. Again, on health insurance is just health insurance. So not life, not disability, none of the extra costs that even though you're paying them as an employer right now, they are saying no, it's only health insurance. And you may be able to slide dental in there, but anything else they've excluded.
You just slide it on in. Okay, Nick.
So you heard from Joy about a lot of expenses that are excluded. And again, I would like to come back to that background of the belief from the government that this was a temporary situation. In fact, some of us are still waiting for this to magically disappear, because when you read the law, you kind of see behind the reflection and the thinking, the fact that the government truly believed it was a temporary situation that they had to deal with very quickly. And again, it has not yet magically disappeared. So it was, the framework was rather strict. The conditions were rather strict. And the government has been coming back in the realization that this may not be as temporary as they thought. And they have tried to make these requirements, some of them, more and more flexible. We're talking about the 8 weeks that is looking to be extended. And then we talk about who is an employee, who is a full-time employee. Those things have been started to be clarified because it's created. But understand that it's been a very strict framework to start with that has been continually being relaxed. And we see that continue. And then the other, now that your loan is forgiven, let's hope everything that we outlined earlier have been applied and you have been forgiven. there are still a couple of things you need to keep in mind. The first one, and this again goes back to what Beverly and Joe was saying, you need to keep your documentation. If you have a loan above $2 million, you know you will be audited. But even when you have a $100 loan, please keep your documentation very safe for at least 6 years, because anytime the SBA can come in and ask to access that documentation. And then again, the fact that you're below 2 million doesn't exempt you from audit. You could still be audited, and make sure you keep those documents at least for 6 years in a very secure manner. And again, think about your overall business. We didn't spend a lot of time talking about the deductibility, but one question that has been largely debated in this law is the fact that the government is saying, even though you have used the funds to pay your employees, you cannot deduct. And we know, looking at the tax code generally, salaries, wages are fully deductible, a clearly deductible expense. And from a government perspective, they're saying, okay, because you had the funds and because the funds were forgiven ultimately, and you did not get a cancellation of indebtedness income, so this was not taken into account as income for you, we prohibit you from taking a deduction, because they see that as a double dip, where you are not only getting a cancellation of indebtedness income, but you're also trying to claim a deduction. But again, from a purely technical analysis, and a lot of organizations are pushing for this to say that this should still be deductible. And again, the answer, we still don't have that yet. Or at least we have an answer now that a lot of people are trying to fight, which is to say you cannot take a deduction for forgiven PPP loan funds. And this is extremely important, because a lot of companies that were applying into this program, their analysis and their evaluation was to say, okay, I get a loan, probably forgiven, but I also get a deduction. And they factored all this into their decision to go for this program. I was talking earlier about the need for you to look at the other assistance programs that exist. And then when the government comes in and clarifies that, in fact, you cannot deduct that, that weighs into your calculus in the beginning, where you could actually have looked into a different program, into a different support program that could have shown up to be ultimately more beneficial to you. But on the deductibility point, at this point, the PPP forgiven loans are not deductible expenses, even when used for employee wages and other business expenses. They are not deductible. The other programs that are affected, again, as a business, you're always thinking holistically. There are very attractive programs, including in the CARES Act. If you have a PPP loan and your loan has been forgiven, you are precluded from using a number of really attractive programs that exist already. I can think, for example, of the Social Security deferral. You know, the employer, as an employer, you are obligated to take over 6% of the salary of each one of your employees and pay that to the government and Social Security up to a certain limit. And the law, the CARES Act, allows you to not pay any of that to the government until December 31 of 2020, and only pay 50% of that, of the amount that was due this year in 2021, and another 50% of that, the other 50% of that in 2022. For some large businesses that we deal with, and again, when I say large, I still keep them in the purview of the PPP, meaning 500 employees or less. They could find that kind of provision more attractive to them, where they are actually keeping a number of funds that could have been available, that could have been for them to give to the government that they are not giving at this point, and they can use those funds for other purposes, knowing that they will not have to pay them until 2021 and 2022. And those are deferrals that do not come with interest, that do not come with penalties or whatsoever. It's money that is available to you free of cost. Deferral. So I bring that again to always take a step back and think of the whole framework and think of the overall system and just the CARES Act, and always looking at the different programs. But again, probably quite late in the game for some people who have already applied and gone through and secured a loan. And it's kind of frustrating to understand that the bank will have counseled you that you could use your funds to pay your 1099 and still be forgiven. I think the law is clear on that. You cannot use your funds for 1099 and be forgiven. But now, if you have used the expected requirements some of which are continuing to be relaxed, you are forgiven. Know that you are precluded from a number of other provisions that could have applied to you. And for now, you cannot deduct any of the expenses that you have, the expenses you have incurred as paid during that period with your PPP loan from your tax return at the end of the year. So look at the overall impact on your business in general. And to close with this point, we said it earlier, and as of Friday last week, I believe there was still over $100 billion available in the program. So there is still a lot of money. And even to go further, the number of companies that have returned, Bloomberg did an analysis where they realized that about $20 billion have been returned, which is a number of companies that secured loans at first because they went hastily into this. And some of them are coming back and returning. And the analysis stated that about $20 billion of the PPP funds that were secured earlier in March and April has been returned. And this has been from some companies that have come under public backlash for securing the funds. But a lot of the companies are actually some of those who ran into this very quickly without doing the analysis and realized at some point that the PPP actually was not for them. So make sure you do your analysis and think of the PPP within the overall framework of your business and the impact that it can have for you.
So I just want to piggyback to what Zach said. When he talks about it not being deductible, the impact on that to you is that you may have a higher tax bill going into 2021, right? Because you can no longer deduct those payroll costs. The funds are not income to you, but you're not able to deduct the expenses. So we just want to make sure you guys are not blindsided when you go to file your tax returns in 2021. So if you got a large amount, there may be a need to sit down with somebody, one of us, to do tax planning. That's number one. The other thing is if, you also may want to consider making estimated tax payments, right, for both the federal and the state. And you can't use the PPP funds to do that, but other funds, you want to make sure that you maybe set them aside and sit them aside and pay IRS and the state quarterly. So just FYI.
So today you should have learned what forgiveness means, what PPP funds can be used for, the importance of having good accounting records, why tracking the money is necessary, how to ask for forgiveness, how the economic injury disaster loan impacts PPP, post-forgiveness aspects to consider. We have an additional question. We have additional question. If you receive EIDL advance, is that treated like a loan? And the answer to that is yes. Right, Beverly?
The EIDL advance, it was two things. One was a loan, one was a grant. So the advance is actually treated as a grant from what I understand, but you have to deduct it out of the PPP loan if in fact you got the PPP loan, because that part cannot be forgivable.
Right.
Okay.
Correct.
Okay. And the statement said, the loan was denied and that advance was provided.
Is that something that they got in an email or something? The statement said that the loan was denied or is that something that they're saying that we said during the presentation?
S. Harris, can you provide clarification?
And again, don't try to do this by yourself.
Oh, it was an email from SBA.
Seek help, because that part of the EIDL that will not be forgiven. Again, you can include that in your deductible expenses, and that can bring an additional advantage
right.
to you.
Okay. So that means you got it said the loan was denied, so you received the advance, which is the grant portion, and you have to net that against. You have to take that out of
your
subtract that from the PPP amount, right?
But yes, if they receive, but if they didn't receive any PPP money, then they just, that was the grant and that's it.
Okay. And Kyle, we're concluding the presentation. Do you want to talk a little bit about, we asked, there's a question in here about getting a copy of the recording at a later date and accessing the slides?
Yes, so the recordings of all of the webinars will be on the National Bar Association's YouTube channel in the webinar section. As for the slides, I can distribute them via email to everybody who registered if you guys would like, or because I know at a later date they will be on the website, but we're just making some changes with the website. So that will come a little bit later, but I can distribute them via email if that works for everybody.
Okay, they said, everybody says that's great, and we received several thank yous. Has President Robinson, she joined again?
No, she's unable to make this one, but
okay,
there will be the next time.
And she told us when we were prepping for this call, there's, as you all are aware, with the pandemic and the protesting, and there are several other things that are going on at this time, and the National Bar is taking an active role in those things. And so she's been, even when we were prepping for this, she was receiving several urgent calls. So that is why she couldn't join us today. But I'm sure if she was here, she would thank you all for tuning in and participating in the webinar today, and hope that all of you are active members of the active members of the National Bar. And if you're not, that you become active members of the National Bar. As you can see, there's a lot of work to be done, and you could be a part of the change that everyone is talking about. And the last slide I'll keep up here has our contact information. Please feel free to contact us if you have any additional questions about PPP loan, PPP expenses, PPP forgiveness. As you saw on one of the slides, Joy has a tracker that could help you as you go along, track your expenses, accumulate that information or that documentation that you will need to substantiate that you should be entitled to forgiveness. And also, if you're audited from the SBA later on, it will create that track record to be able to respond to the audit request expeditiously. So again, all of the panelists would like to thank you for joining us, and we really enjoyed this experience, and please join us next time. Thanks.
Thank you.
Thank you. Thank you.